and why Bitcoin scarcity makes it more valuable over time. Plus, we'll explore how large-scale adoption and investment trends are reshaping the future of Bitcoin. Whether you're a long-term Bitcoin holder, an investor, or someone just starting out in the crypto world, this is a must-watch. Now let's jump right into it. Samson Mow highlights 3 important indicators that Bitcoin investors should keep an eye on. First, he mentions the growing adoption of stablecoins like US Tether, which are becoming widely accepted as digital dollars globally. This rise in stablecoin use is a gateway to broader Bitcoin adoption. Second, Mao points out Bitcoin's hash rate, which has hit an all-time high, signaling the network's strength and indicating that the price will likely follow. Finally, he emphasizes the growing demand from institutional investors like MicroStrategy and Bitcoin ETFs as a strong sign of where the market is headed. For Bitcoiners and investors, this means that Bitcoin's upward trajectory is inevitable, especially as these indicators suggest strong confidence in Bitcoin's long-term growth. MicroStrategy's influence on the Bitcoin market, noting how the company often pre-announces large Bitcoin purchases, sending strong demand signals. He emphasizes the irrationality in market behavior, where fear and potential selling pressure, like the Mt. Gox situation, overshadow these bullish signs. While many are focused on short-term uncertainties, institutions like MicroStrategy are showing long-term confidence in Bitcoin, which savvy investors should pay attention to. For Bitcoiners and investors, this highlights the importance of ignoring short-term noise and focusing on these massive pre-announced purchases that reflect Bitcoin's bullish future. Bitcoin's unique value as a bearer asset, where you can store it safely and hold it for long periods without worrying about macroeconomic factors like interest rates or indeed inflation. He emphasizes that long-term value of Bitcoin lies in its scarcity, fixed supply, and the fact that you don't need to micromanage it like fiat currencies or indeed stocks. Mao suggests that Bitcoin's volatility is a distraction. It's the long-term growth potential over 10 to 20 years that investors should focus on. For Bitcoiners, this signals that holding and accumulating Bitcoin is the key to wealth preservation over time. Here, Samson tackles the fluctuating market sentiment surrounding Bitcoin. He discusses the narratives around interest rate cuts and how many see rate cuts as bearish, but in his view, they should be bullish due to increased liquidity in the system. Mao also dispels fears around Bitcoin's historical September price drops, emphasizing the strong demand seen when prices dip, particularly from institutional investors. He also highlights how pension funds and ETFs with large pools of capital remain relatively unaffected by short-term market trends. For investors, this demonstrates that Bitcoin's price resilience, even in a recession, shows how large capital players continue to inject liquidity. Nation-state adoption of Bitcoin is crucial and signals a shift toward the separation of money and state. Now, this adoption would reduce government power over money supply and bring more legitimacy into Bitcoin. Additionally, he notes that state-owned enterprises and nation-states mining Bitcoin are beneficial because they have less need to sell, reducing market volatility. He also discusses how entities with unlimited capital like governments will eventually need to accumulate Bitcoin, further driving its value. For investors, this means that state adoption presents a massive opportunity for Bitcoin's growth, as these players will inevitably turn to Bitcoin as a key asset in their portfolios. In this part, Samson clears up 2 major misconceptions about Bitcoin. First, he addresses the belief that you need to trust Bitcoin, when in reality it's a trustless system where you can verify everything. Second, he stresses Bitcoin's extreme scarcity, pointing out that large institutional investors and nation states will find it increasingly difficult to accumulate significant Bitcoin holdings. He notes that entities like MicroStrategy and ETFs are already holding substantial amounts, leaving limited room for others to enter the market. For Bitcoiners and investors, this underscores the importance of acting early to accumulate Bitcoin before it becomes even more scarce. Finally, Samson shares his prediction that Bitcoin is massively undervalued right now. He uses the analogy of a beach ball being pushed underwater. it can only be held down for so long before it shoots up. With institutions like MicroStrategy, Tether, and even pension funds continually buying Bitcoin, the demand pressure is building. He argues that while short-term market movements may seem low, the long-term trend is inevitable. Bitcoin prices will rise significantly due to its limited supply and growing demand. For Bitcoiners and investors, this is a clear call to recognize the massive opportunity of the factors driving Bitcoin's future growth. From institutional and nation-state adoption to Bitcoin's scarcity and market resilience, it's clear that this asset class isn't just here to stay. It's set to redefine the global financial landscape. Whether you're holding Bitcoin for the long term or considering investing, the indicators and trends we've discussed today should provide you with plenty of food for thought. Make sure to like, subscribe and hit that notification bell for more in-depth analysis on Bitcoin, blockchain and the future of finance. Thanks for watching and see you next time.